Good morning. It's Harvey Jackson. Just going to get through some news items that happened on Friday mostly. Very little news over the weekend, actually, but the markets have a bit of a sell-off because of the commitment of traders, and the EPA provided no guidance, and it doesn't look like there's going to be anything for this coming year at the start here. Just going to play a little bit of the market.
Shutdown. They just said they're going to give us a accelerated program on they're releasing these commitment to trader numbers. It's almost every day now, which is great. I think the sooner we get caught up, the better. Because when you look at what the trade was guessing, what the Reuters average trade guesses and things like that, versus what the numbers actually came out as or are coming out as. Wow, was the trade wrong? The funds were so much longer in soybeans than the trade had even imagined. And they were long corn as of November 18th. I mean, the trade thought they were still short basically to.
So there you have it. It's just that news kind of definitely put some pressure on the market. Soybeans fall to 7-week low, and this article is kind of citing some of the slower pace with Chinese buying, but they are buying, so you cannot discount that at all. Uh, and there could be an accelerated pace here too, just like the commitment traders. Trump administration unlikely to finalize the 2026 biofuels quota, and that's usually December 31st that it has to be done, and that's definitely putting pressure on the oil seeds for sure, which had worse day than canola for is by far. So just a bit of a summary. The EPA just talking about how it's putting investment decisions on fuel makers, farmers, and commodity traders. The EPA proposed a final proposed raising renewable fuel standards for 26-27, increasing the targets for advanced fuel and biomass based diesel, while tightening the rules of on imported biofuels, which is already well known. Like that, so they've no more used cooking oil, but they also decreased the usage of the Canadian canola with a half a RIN kind of scenario as well. So the quotas are now part of the broader energy and agricultural policy decisions, including year-round sales of higher ethanol blends and penalties for imported fuels. The White House is seeking common ground between the oil and agricultural interests. So he's got, he's trying to balance the big oil, the small refineries that he gave piles of exemptions to in his past, and trying to keep the farmers happy. So he's caught for sure with that decision. This article is just talking about the that we produced our record crop in Canada, and quotes on just how did we get here. I'm going to say it's the farming practices, the technology, you name it. I don't agree with everything in there, but definitely the farmers are finding ways to produce more, and they have to with the problems that we're facing with low margins or lower prices. So just a quick look at the weather. You can see it's an extreme cold, and that cold is actually going to be shifting to the eastern seaboard here. Just a snowpack, and there is some more along the border than anywhere. Uh, Quick look at the weather in South America. There is no real big areas, or if anything, it might be making up for some deficits in soil moisture for sure, the way it looks there anyway. Quick look at the canola is down, or was actually flat, but down quite a bit on Friday. So we're trading at 606 on the front month. Rapeseed down a couple of bucks, 473.75. Soybean oil is trading right around the 50 cents a pound. Crude oil down some more. We're 57.16 right now, and the diesel fuel is down as well, 219. So this year I think is responsible and partly responsible for keeping this market down as well. Soybeans trading just a little bit red at this point at 1078. Spring wheat still down 575, and your hard red winter and your Chicago's are trading 3 to 3 and 3/4 down. Milling wheat down a buck in the French wheat, and corn flat at 448, and the Canadian dollar slightly down as well. So a quick look at it. This is the big breakout that we saw, and I had put a line in there just to show where that previous low was. Now that we've got basically free test here to get down to probably the 600 as a psychological area, and then 587. is, or 587 is where I have the number. I think we're also talking 583 or something like that. But we have to look for an exit, just probably right close to the previous lows that we made. Here's your November contract, the same breakout, less down, of course, than we have on the front month for sure. European rapeseed, we're currently trading 158. Let's call it 159, $159 differential between Canadian canola and rapeseed priced in Canadian dollars. So we're getting up there. We obviously broke above that line. We're probably looking for anything closer to 200, which gave us a fair bit of export last year. So obviously getting above that 145 mark is probably going to entice some more canola. But the problem is that if it's going to Europe, the long way around is Vancouver, and that is going to cause some problems there as well. Soybean oil futures trading just below this 200-day moving average now. So if it continues, we'll have to see what kind of distance we would get going down here. Soybean futures actually help her pull down, still above the 200-day moving average. But the soy meal actually has been on a little bit of a recovery, so it looks like soy meal is actually creating that support for the soybean complex. Crude palm oil. Just on its way down, keeps going down. It's got some pressure for sure following the other oil complex, but I think this is what's causing a lot of the pressure here too. 57, 57.10 is, I think that's where. Oh, sorry, $57 is where the crude oil is currently trading, and that's getting to the bottom end of this range. Obviously, that's putting pressure on profitability of using renewable fuels for sure. And like I've said, I think that's the workout. You can see the diesel fuel is back, trying to get back to these lows, and then they would have to get down to, closer to the $2 a gallon mark as well. But it's definitely pulled back down. Canadian dollar, it got to these higher levels. I'm still looking at people's accounts and try to equalize and get rid of some of the US dollar exchange stuff there. The US dollar is actually going down. It should actually help US traded commodities, but still everything was under pressure as of Friday. Was, whether it continues. Brazilian real, getting back to some of these highs here, and the price differential, I believe it's still $20 to $30 a ton. Differential between soybeans getting sold out of the U.S. Ports, and Brazil is still cheaper in Brazil. Next report is actually labor force report, and then WASDE on January 12th. And that's all I have for you.